was good, man. Another banger, another educational banger. If you haven't watched the other videos like liquidity sweep, etc., like I have posted many. Like you guys don't even understand. I'm doing this for free. I have valuable information that I need to spread, and it's all for free. Here's what's gonna happen. New York session opens in like 40 minutes, and I'm gonna live trade with the Discord. If you wanna join, I'll leave the link in the description. Yeah, after that, the reason why you're here, as you can see from the title of this video, it is time to teach you about daily bias. Where is price heading for today? Are you gonna sell or are you gonna buy? And that's what's up. Yeah, I'll trade with the Discord. I'll update you guys on the educational part. Let me cook, man. Let me cook. We in the charts. Alright. We in the charts. So here's what's up, you know. The thing that you have been waiting for. Daily bias. Daily bias. The thing that you must need as a day trader. You need to know your bias. Where is price? Where is price most likely to go for the day? And that's daily bias. When you know that, you're ahead of 99%. Okay? Remember, like it's trend, it's like a wave, you know. You want to go with the wave, okay? Don't go against it. You flow with it. You flow with it. You go with the wave, okay? This okay. Like I've told you, you have a trend. Higher highs, higher lows. Okay? Bullish. Bearish. Lower highs, lower lows. We're bearish. Bullish, bearish. Okay? When we're bullish, we want to buy. When we're bearish, we want to sell. Obvious. That's obvious. Okay? That's the basic, but everybody needs to know. Okay. Why? We have a wave. Okay, let's say we have it's a beach. Okay, this is a beach, and here's a wave. Okay, I know this looks kind of shitty, and this is you. This is you. All right, this is you. This is the market structure, okay? When you go against it, it crushes you. When you go with it, when you go with the wave, aka meaning you go with the bias, if it's bullish, you buy on right time. This is what happens. This is the wave. You ride the wave. You have a surfboard right here. You ride the wave. Boom. You go to the top. But if you go against the bias, this is what happens to you. Box. You get fucking destroyed. So, hope you understood from that. You gotta go with the wave. With the wave, okay? Go with the wave. Go with the bias. Okay. So now that you know what is a bias in, like, what does it mean? How to spot them? Okay. Bullish uptrend, okay? Break structure, switches bias. Simple as that. On that particular time frame, obviously. We always use. I mean, where do I look at? Where do I look at time frames? And what time frames do I look for bias? Okay, these are the most important. Daily, 4 hour, and 1 hour. Okay, these are the biases that I look the bias. Okay, the main ones. Okay. Okay. Now, what can flip the bias? What can flip the bias? Okay, let's say we have a lot of fucking liquidity here. Okay, we're currently bullish. Sweeps the liquidity. It's a sweep of liquidity. What can happen? What usually happens? It can flip the bias if it sweeps liquidity. If we get a break of liquidity sweep and break of structure on a higher time frame, flips the bias. Okay, on a higher time frame. All right. I'm talking about hard time frames like daily, 4, weekly. But for us day traders, I like to look at daily and 4. Those are the main ones. Those are the main ones. 1 hour is also important for little short-term stuff. Okay, and yeah, that's the bias. That's how you look at the bias. For entries, you look at lower time frames. Okay, hope you got it. Okay, bullish uptrend, break structure, closure, candle closure below this low is a break of structure. So in this, let's say this would be 4 hour. Now this 4 hour time frame is bearish because we broke structure. But if it breaks again to the upside, now it's bullish. 4 hour time frame, really important. All right. Daily time frame. For bearish, break structure, high closure above the recent high. Bullish, then we're bullish. We switch bias. Okay. What also can switch the bias, like I told you, if we're bearish on the daily, bearish, we have liquidity here, sweeps the liquidity, that can flip the bias. You can go on lower time frame, see a break of structure, and flip the bias essentially, because liquidity sweeps are what moves the market. Remember that. But a break of structure is a confirmation that the bias has switched. Okay. Okay, now that we know how is bullish or bearish, how can we know the bias? Like exactly. Okay, so the main question is, now that you know how to find the bias on one time frame, you need at least two, I'd say. Shit. Okay, let me just put it like this. Daily and the 4 hour are most important, right? They have to be the same. If they're the same, then you know the bias, okay? If daily and 4 hour are bullish, then the bias is bullish. If daily is bullish but 4 hour is bearish, then I don't know, you should just skip it unless you get a really good liquidity sweep on 4 hour, like to the down from the downside, then you can possibly find a setup. But remember this one thing: higher time frames hold more power. Like I always tell you, a 1 hour break of structure to the upside can just be a 4 hour retracement. What I mean retracement, the 4 hour can just sweep liquidity essentially, right? Sweep liquidity and then continuous direction. Let me just show you in the charts, okay? Similar to break of structure, right? Okay. For example, daily. Okay, daily is currently daily is currently bullish. Why are we bullish? Let me just show you. Last time we broke structure, it was to the upside, right? That means we're bullish. It's that simple, man. If you know what is a break of structure, then you know what is a bias. Okay? Daily is bullish and 4 hours bullish. So this is a clear evidence that the daily bias is bullish. Okay? And okay, 1 hour is bearish. 1 hour is bearish. However, we have this fair value gap right here. Big fair value gap has not been completely filled. Then we also have this order block right here that is currently in. This order block is right here, tapped into it. In this case, I could go to a 15-minute broke structure here, but I will enter because we're not in a market open. Bias is still bullish. Why? Because 4 hour and daily is bullish. Okay, that's cool. What else? Let me just show you gold. Okay, this is a good one. Gold. We're currently bearish. You may wonder, hold on, didn't this break? That's the reason. It didn't yet break. When the candle closures, when we get a candle closure, then we're bullish. Okay, then we're bullish on the daily. And looks like we're about to break structure on the daily. I mean, there's almost 3 hours left, but okay. And 4 hours bullish. 4 hours bullish as well. Okay, and 1 hour bullish. If daily break structure then we're bullish. We have a bullish bias. Okay, that's cool. Okay, but right here, do you see this liquidity sweep? In this case, we're bullish. But if we sweep like this massive sweep of liquidity, I would be like, do I really want to take this? Even though we're bullish on these charts, like we broke structure to the upside, I'm still like sitting on my hands, because you know it's a big ass liquidity sweep. And it's a higher time frame liquidity sweep. That's a prime time to look for shorts, because you know if we see a reaction from the liquidity sweep, like this 1 hour break of structure, you could basically take it, like, you know, when you get, because a higher time frame holds a lot of power. When a higher time frame break structure sweeps liquidity, that's a big thing, you know, especially for daily time frame, and daily time frame and up, they're really powerful. So keep that in mind. Higher time frames, you look for bias, you look for sweeps. Lower time frame, look for shorts. Lower time frame, you look for entries. You can also look for sweeps for like short-term stuff. But that's just facts. Higher time frames always hold more power. That's how it is. That's trading, okay? That's trading. Okay. Okay, currently, let's go to S&P 500. What do we have here? We just recently broke structure to the upside right here. A high, up candle followed by down candle. Candle closure above this high, that's a break of structure. We were bearish, okay? But broke structure, now we're bullish. That is bullish. 4 hours bullish. That means we have a bullish bias. We would only look for bias. And we're making all-time highs. When it's an all-time high, you shouldn't go against it, let's be honest. Because there isn't any data here that it could sweep something. So I must be honest, I wouldn't short S&P for some time. I mean, obviously if daily and 4 hour is bearish, then you may look for it. You may look for a short. But currently it's risky. It's more risky than ever. Riskier than ever. Because S&P is just rallying up. Okay. Obviously in these cases, if we're making all-time highs, the price may want to come down, you know, take these imbalances, like this imbalance right here, this imbalance, this imbalance, this imbalance, this order block, like this order block, like all kinds of stuff. But we're bullish. Why? Bias is bullish. Why? Because daily and 4 hour is bullish. Okay, let's go on Bitcoin. But remember, okay, Bitcoin is a really bad example, because crypto higher time, like you have to use more higher time frames. Okay, GU. What is GU? GU is bullish on the daily. Why is it bullish? Last time it broke structure, it was to the upside. Right here, boom, break structure right here, bullish. So that's one time frame, that's a daily. 4 hours, bullish as well, because it broke structure. Last time it broke structure, it was to the upside, bullish. Cool. That means the bias is bullish. We're looking to buy. Okay. If it would sweep out this liquidity right here, this higher time frame liquidity, I would kind of a little bit sit on my hands, because what liquidity sweeps do usually, they can flip the bias, especially on higher time frame. When it sweeps liquidity, like liquidity sweep, banks and institutions, they take out orders, they take out people out from the market, fill orders, then they can flip the bias or continue the direction where they want to go. Like right here, this is liquidity, has a lot of stop losses, like retail trader stop losses. Also, it has a lot, like millions of orders right here, okay?
let's say it sweeps out this, even though we're bullish, it's still, because it's higher time frame, it can flip the bias. So that's what you gotta be careful about when you look in the bias, okay? Even though everything is bullish, but if you see a higher time frame liquidity sweep, remember it can flip the bias, and it usually does. Not always, but usually. Let's say we're a bit bullish, okay? Bullish, everything's high highs, high lows. Everything's bullish. Daily is bullish, 4 hours bullish, 1 hour bullish. We have liquidity all the way up here. It haven't swept on higher time frames. We're still bullish. What can we do now? What can we do now? We can go to a lower time frame. If we have liquidity down here, sweep this and then continue. The strategy is actually quite easy and just simplified, okay? If everything's bearish, what can you do then? Everything's bearish, going down, okay? Daily is bearish, 4 hours bearish. Haven't had any buy side liquidity sweeps like that it could switch the bias. What can happen then? You go to a lower time frame, see for a liquidity sweep, lower time frames, sweeps them, continues down, lower lows, lower highs. Okay, it's cool. All right, let me give you an example, okay, this right here. Are we bullish or bearish on the daily? Hope you guessed it right. We're bullish. Why? Because last time we broke structure, it was to the upside. Right here. Boom. Okay. Structure breaks to the upside. Okay. Fuck my fucking nose, man. Okay. Alright. What is 4 hour telling us? What is 4 hour telling us? It's telling the same thing. We're bullish. Why? Because last time we broke structure, the last time broke structure, it was to the upside right here. And we haven't broken back down. This is a low, we didn't break. This is a low, we didn't break. This is a low, forming up. And we haven't broke structure to the downside, okay? So we're bullish. Okay, then we'll go to a 1 hour. What is 1 hour currently? What is 1 hour currently? It's bearish. Okay? It is bearish. But remember this. Even though 1 hour can be bearish, but everything is bullish, what do you then look? From 1 hour, you could look for a liquidity sweep. One of these, because everything else is telling us bullish. So you go to a lower time frame, see for a sweep, then a break of structure even in a lower time, and then you go to a lower time frame, see a break of structure. Simple, man. Okay. So how can we spot the bias? Okay. First, check daily bias. Bullish or bearish? Okay. If it's bullish, then you go to a 4 hour time frame. Check, is it bullish or bearish? For a time frame, let's say, is it bullish or bearish? Okay, let's say it's bullish. Bias is bullish then. Okay, then you go to a 1 hour time frame, lower time frame. If daily and 4 hour are bullish, but 1 hour is bearish, then from 1 hour you can look for a liquidity sweep. And when you get a liquidity sweep, you go to a lower time frame, see a break structure and entry on the buy. Okay, you buy. Alright, I hope you understand this. Like last time broke structure, where did it? What was the last time it broke structure to? Was it bullish or bearish? If it's bullish, then on that particular time frame we're bullish. If it's bearish, then on that particular time frame we're bearish. Then remember this one thing. Liquidity sweep on higher time frame can flip the bias. So be aware. Remember this. a liquidity sweep on a high time frame can flip the bias. So be aware, okay? Be aware. So if we see like a liquidity sweep on a daily bias, okay, on a daily time frame, a liquidity sweep on a daily time frame, what can it give to us? We go to a lower time frame after that, see for a break of structure, we can enter from that. Liquidity sweeps are the things that move the market, and that's how it goes. Remember that. Remember. Okay. Okay. Hope you understand. Remember. I mean, what happened here? Even though this is a 1 hour, I mean, liquidity sweeps happen on every time frame. These building blocks, they happen on every time frame. But even though it's 1 hour, still, we get a liquidity sweep, right? Liquidity sweep. Boom. What happens? Liquidity sweep, go to a lower time frame, 5 minutes. Get a break of structure right here. This is a break of structure. Break of structure, boom, break structure. Stop loss above the liquidity area. This. And take profits can be this low, these lows. And that's like and this was like perfectly aligned on New York Session Open. This is a New York Session Open. Sweeps liquidity, break structure. Wow, this is a perfect setup actually. Liquidity sweep, break structure. Remember, liquidity sweep flips the bias, break structure gives us confirmation. Gives us the confirmation that it's gonna flip the bias. Okay. Hope you understand. Hope that makes sense. But hey man, that's about daily bias. I hope I explained it well. You know, I am kind of tired, but you know, shit has to be done. When daily and 4 hour is bullish, then the daily bias is bullish. If daily and 4 hour are bearish, then the bias is bearish. Okay. But if we get a big liquidity sweep on like a daily time frame, it can flip the bias. What do you do then? Go to a lower time frame, break structure, you can enter. If you're on the market session open, like because there's, if you're not, then there's no volatility. But yeah, I mean that's about daily bias. Hope you understand, man. Really important concept. Like you know, if you don't know where the price is going for the day, how can you even trade? Okay, peace, man.